This is the daily fiscal pulse for the 4th of June, 2026. Remember, we're looking back one day here, so everything you're about to hear reflects conditions as of Thursday's close, not real time. Let's set the stage first. What's capturing investor attention right now is pretty straightforward. AI and tech are the story. You've got reports circulating about Meta potentially raising tens of billions to fund their artificial intelligence initiatives, and that narrative is clearly moving prices. But as we always say, there's a difference between headline noise and actual capital flows. Thursday brought in $8.9 billion in net fiscal transfer. The meaningful part here is that spending momentum is accelerating. Tax receipts carried most of the weight, contributing $5.3 billion. The ES tells you something important. It closed at 7,600, which means it's maintaining ground above the 20-day moving average sitting at 7,508. Over a 20-day window, the index has traded across roughly 278 points. Even with fiscal headwinds present, the price action remains resilient. Pull back and look at the slightly longer view. Government spending over the last 5 days is averaging approximately $27.5 billion per day. Stretch that to 20 days and you get $15.9 billion. That gap matters because it means more money is flowing through to households and eventually into the market. The year-on-year picture doesn't show much movement. Spending sits at roughly $1,116.8 billion, which tells us there hasn't been a meaningful shift in the baseline fiscal support we're working with. From a positioning angle, the fiscal data isn't screaming opportunity in either direction right now. Our conditions gauge reads +39. Layer in positioning dynamics and you get a mixed picture. Leveraged funds are paring back exposure while margin debt is hitting the 100th percentile. That's historically been more of a caution signal than a confirmation. Here's what matters operationally. AI and tech might own the headlines, but fiscal conditions are establishing a floor underneath the market. When the government is injecting liquidity actively, negative surprises tend to get absorbed with less volatility. A couple of dates warrant attention going forward. The 10th of June marks the SSA payment cycle, which falls on the second Wednesday of the month. These dates can materially shift short-term flow dynamics. The fiscal tailwind continues to build and the data indicates there's more room to run. The real question is whether the market is pricing that in before it happens. That's where your edge sits right now.